Good morning, David here with Weekly Wheat Look. Today is 11th of May, Friday, pre-market open, 8:45, and as usual we're looking at November UK wheat chart 2012. That's the new crop chart, and as you can see we've got the daily bar chart in front of us, and I've got three moving averages over at the moment. I've got 21-day, 50-day, and obviously our 200-day moving average in green that we've been looking over the last 3 months. Prices closed last night 148.50. So that means our support and the 200-day moving average have been broken because we've seen a closing below those two levels. Right, what else we got? We've got a crossing of the short-term moving averages. That's the 21 and the 50-day here, if you can see quite clearly. So basically, the short-term trend that we've been watching over the last month and a half is still in place. The longer-term trend is technically still up until we get across of the 50-day breaking through the 200-day moving average, and then that would give us a golden cross to go back down again. But obviously, as you can see, the distance between these two is quite vast at the moment, so really you're not looking for that to happen for another 3 or 4 weeks. So that will take us into June. But certainly, as to where support is below, there isn't really much, to be honest with you. Now we've broken through this 150, there's minor support at 146, but there's nothing stopping this market going right back down to the lows of 136. As you can see, they always say there's plenty of clear space down here. I mean, there's nothing I can see on the chart to support it. I mean, obviously markets don't go down in one clear direction, so we could see a bounce back up to test this 152. But if that was the case, that would be a bounce in a short term, in a short term downwards trend. As to timing to sell into this downwards trend, if you just go down a shorter time frame, I'm running this chart with a 5, 10 and 21-day moving average. The one to watch is the blue line here, pointing down the 5-day moving average. And if you're looking at selling at the present moment, obviously look to get as close to that 5-day moving average as possible. If that 5-day moving average breaks here, say back at 150, then look for this next line up, which is the 10-day moving average here, 152, which coincides with that other chart. So it just gives you a ballpark figure to keep an eye on in the short term. Say for next week you do see a bit of a rally, then obviously looking to sell into this rally at these two levels. But vice versa, if this 48 breaks today and goes, then we are looking at significantly lower levels. But this obviously doesn't change, for some time until we get, any sustained action on the upside. So the trend is down short term, and the long term trend is still up, but obviously deteriorating the closer these moving averages cross down to the 200-day. And I'll put an update this time next week. Thank you very much for watching.